Welcome to the December 4th, 2020 video version of the Wagner Daily. Once a week, this video replaces the written commentary portion of our report. Hopefully it serves as a nice change of pace, as well as offers some insight as to how we set up our charts, what time frames and indicators we use. In this video, we're going to run through a few broad market averages, then we'll go into open positions in the model portfolio, and then we'll wrap it up with a look at some setups that we feel could be in play with the next few days. First up is the S&P 500. And on the daily chart to the left, we see the false breakout on 11.9, a pullback to the 10-day EMA that held. And for the past few weeks, the 10-day EMA has been providing support. As of late, the S&P has struggled to push higher with 2 of the past 3 days stalling type action where the close is off the highs of the session. And on the right, we have the monthly chart with a top trend line. This is a trend line drawn at the highs, connecting major highs. And if we look on the weekly here, could be the reason for a bit of stalling action in this area. And as trend traders, we're not interested in fighting the trend. And with the S&P 500 at new highs, with higher highs and higher lows above the 10-day EMA, it is in a clear uptrend. As for the NASDAQ Composite, some stalling on Thursday here, a false move above the 2-day high. Volume picked up slightly on the NASDAQ Composite, and I don't know if I'd call this a clear-cut day of stalling or churning at the highs, because it's only a close that's about 0.5% off the highs. If the close was more like 1% off the highs, which would have a wider wick here, that would be more of a classic distribution day or churning at the highs, selling into strength. But on the weekly chart to the right, we see an index that's at new highs with the price action this week bouncing off the highs of the base. And back to the daily chart on the left, we have the price still setting higher highs and higher lows above a rising 10-day EMA. Again, we're not ones to fight the trend, and this is and the NASDAQ is clearly in an uptrend. Next up is the FFTY Innovator IBD 50 ETF. So this ETF represents growth stocks, which is what we mostly trade, and it's lagged the S&P 500, which has set new highs, and the NASDAQ Composite, which has also set new highs. FFTY stalled once at the prior high, twice, and this is the third time. So it's relatively weak compared to the major indices, and that's reflected in its relative strength line, which set a new low in November. And although we've seen some decent rallies in growth stocks, we haven't seen stocks break out to new highs in numbers. Like we saw earlier in the year, many have struggled to extend past the buy pivot with a decent amount of power, what we normally like to see. And so, again, growth stocks are just not in favor right now, and that's what we're having to deal with. Some of you may be thinking, well, if growth stocks are not in favor, why do we continue to trade them? And that's a fair question. And the reason why is because shifting your style of trading just because it's not working is a really bad idea. Because when you make the shift to some other style of trading, that's the time when the style that you just left will start to work. We've seen this happen time and time again through the years. We've done it ourselves. Just about everyone's done it when they start trading. So we want to avoid that and just stick to what we do best. And it's not like we're having no success with new entries. We have plenty that are in the money, a significant amount. It's just that we're not seeing the numbers and the type of explosive action that we saw early in the year. As for positions in the model portfolio, first up is Snowflake, SNOW. We're long from 248. We sold half the position on a break of the 310 area for about a 25% gain. We held the remaining half into earnings, which were after the close on Wednesday, and this was Thursday's response, so a big time move up. We'd like to see the price consolidate and move higher from here And we definitely don't want to see the price action come back down below Thursday's low. Tesla, we're long with a 17% gain from this breakout to the highs here. And for now, we have a stop just beneath the low of 12.2. Looking to protect gains. We'll see if it can continue to rally while holding the 10-day EMA. SONO, we're up about 6% from an entry here over 2180. And we'll have to see how it holds up. It has the rising 10-day EMA right here. And hopefully can continue to hold above the 10 MA and trend higher. LAD was a buy on a breakout to new highs around 293, which did follow through a bit and then pulled back for a few days and then went splat here on 1130 down to the 10-day EMA, which it has held and could still resume its uptrend if it can get above this downtrend line, say over the 2-day high, and hold. Next up is SNAP, Snap. We're up about 13%. We like the move off the 20-day EMA. We added to our position on Thursday on a slight pullback here, just above the rising 5-day EMA. Looking for the price action to hold above this 10-day EMA and continue to push higher. Restoration Hardware, RH. We're long from 413 on 1117. So right around here. And this was a breakout to new highs. And currently we have a stop in place just beneath the 10-day EMA as it's heading into earnings on December 9th. TWLO broke its downtrend line. We started buying, I believe, around 293. And then we added to the position on Wednesday based on this bullish reversal candle. And as we can see, Thursday's reaction to the bullish reversal wasn't very good. It was a pickup in volume with an ugly close, so some stalling here. Currently, we're looking for the price to hold above the low of the reversal candle. If not, then we'll be out of the full position. We have a stop for partial size a little bit higher, but if the 12.2 reversal bar low doesn't hold, we'll be out. A&D, we're long from several entry points, but basically we have an average price of about 85 here, right around here. We're currently up about 8%. This was a false breakout to new highs, so we can expect more selling in the short term. We have a stop just beneath this 5-day EMA to protect some gains. Then we have a stop beneath the 10-day EMA, looking for price to bounce off that area. If it can't, then we'll likely exit. We also have this uptrend line here that should be somewhere around the 10-day EMA to provide additional support. TPTX, we like to break a downtrend line and the move through resistance at 110. The trade worked out well on day one with a nice breakout on 12.1. Failed immediately thereafter and not looking too good. We have a pretty tight stop in place beneath the 2-day low. Final position is an SE, which we just purchased on Thursday on a move through resistance around 186, and then we added more at 188. Today's close was really ugly on a big pickup in volume. We sold 2/3 of the position during the day when it dipped back below the opening price, and we have a tight stop on the remaining third here. Just ugly price action from a breakout. We did mention in the newsletter that we were giving SE the benefit of the doubt here because it's been such a strong leader, but there were 1, 2, 3, 4 days of heavy distribution leading up to this breakout. So if we factor in this ugly reversal along with this distribution here, it doesn't look too good, and it could be vulnerable to more selling in the short term, possibly even test the 50-day MA. So all of our stops are in place. There's not much to do other than see how our positions hold up over the next few days. As far as potential setups that are on our watch list, again, this is a tough market right now with breakouts struggling to follow through. Art and REGI, REGI, which I forgot to mention earlier as an open position, is still very much in play above the 3-day high and on a break of the downtrend line. So the early entry would be over 61 and the second entry over the downtrend line. NVCR is another potential breakout candidate. Missed the early entry here at around 128. We'll have to see how it reacts around this downtrend line. If it can go sideways for a day or two, that could produce a lower risk entry point. DDOG, Datadog, broke its downtrend line. And this is a setup that might not lead to new highs, but is one to watch for possibly a breakthrough of the 50-day MA, maybe for a starter position. If it does clear the 50, then look for the price to hold above this 10-day EMA, so maybe a 5 to 6% stop. PDD reversed off the 20-day EMA on a pickup in volume. If it can break through this 150 area, could be in play. And the last chart of the night is a fairly recent IPO, MAXN Solar, MAXN. Like this type bull flag like action here at the highs. So if it were to move higher from here, look for some follow through to the upside, and that would be for a quick swing trade. So just a quick recap, broad market averages, the S&P 500 and the NASDAQ Composite remain in a strong uptrend above the rising 10-day EMA at new highs. Growth stocks have underperformed as of late and are struggling to break out to new highs and follow through to the upside to make significant progress from the buy pivot, which suggests in the short term, this is going to be more of a stock picker's market for our kind of stocks. All right, that's a wrap for tonight's video. Thank you for joining us. Have a great weekend.